Welcome to FactWireReport, your global source for balanced updates that shape markets, technology, and policy. Today we look at key economic shifts, from new U.S. trade measures with China to early reactions across global markets. Stay tuned for a concise, fact-checked overview of what's moving the world right now.
The United States announced a sweeping policy update introducing 100% tariffs on a wide range of Chinese imports. President Trump framed the decision as an effort to rebalance trade and strengthen domestic industries. Officials emphasized that essential goods, including consumer electronics and automotive components, may face price adjustments in the coming weeks. Chinese representatives have yet to issue an official response, but early signals suggest cautious evaluation rather than confrontation. Economists note that such measures could influence inflation and global supply chains, marking one of the most significant trade steps since 2020. Up next, market voices and analysts weigh the impact of America's latest tariff wave. Financial markets showed mixed signals after Washington's new tariff announcement. Investors expect short-term volatility as the U.S. dollar strengthens and gold prices rise. Analysts warned that higher import costs could pressure corporate profits, especially in technology and retail sectors. Still, others see opportunity for regional manufacturing growth as companies seek alternatives to Chinese supply chains. While some commentators suggest the policy might temporarily slow economic momentum, most agree that its final impact will depend on negotiations in the weeks ahead. Coming up, Wall Street feels the pressure as tariff news ripples through trading floors. Wall Street entered a cautious phase following renewed trade tensions between the United States and China. Major indexes fluctuated as investors assessed how new tariffs could affect global supply chains and corporate margins. Financial experts highlighted that recent volatility reflects uncertainty, not panic, with most sectors still within normal trading ranges. Energy and technology shares experienced the largest movement, while defensive assets such as bonds saw moderate inflows. Analysts emphasize that long-term fundamentals remain stable, suggesting this period of adjustment may be temporary rather than structural. Ahead, global markets react as investors weigh deeper economic risks. A moderate sell-off on Wall Street renewed conversations about potential market corrections. While some analysts pointed to profit-taking after months of steady growth, others linked the drop to uncertainty over global tariffs. Financial strategists stress that the broader economy remains resilient, supported by consumer spending and corporate earnings. Despite the short-term pressure, leading investment firms recommend maintaining diversified portfolios and focusing on fundamentals. Experts agree that volatility may persist, but the long-term outlook remains constructive. Coming next, how AI investment and corporate earnings shape the next wave of market trends. As markets prepare for the next corporate earnings season, investors are watching two main forces: tariff policy and artificial intelligence spending. Analysts expect that while new trade measures may temporarily tighten margins, increased investment in AI infrastructure could offset those effects by boosting productivity. Sectors like semiconductors, cloud computing, and logistics remain in focus, with firms prioritizing automation and data efficiency. Economists suggest the coming earnings reports will clarify whether AI capital expenditures are driving sustainable growth across industries. Next, how tariff moves interact with economic data and market sentiment worldwide. With limited new economic data available, investors are turning to policy signals for direction. Analysts say recent tariff decisions have gained outsized influence because the usual stream of macroeconomic indicators remains thin. This data vacuum makes markets more sensitive to headlines and short-term sentiment shifts. Experts note that in such periods, clear communication from central banks and governments plays a critical stabilizing role. The consensus view suggests volatility may ease once new economic reports arrive later this month. Coming up, China's latest resource strategy adds a new dimension to global trade talks. China has signaled new restrictions on the export of rare earth materials, intensifying a key factor in global trade negotiations. These materials are critical for industries ranging from electric vehicles to advanced electronics. Analysts describe the move as a strategic challenge rather than a confrontation, aimed at emphasizing China's leverage in high-tech supply chains. Governments and corporations worldwide are now assessing diversification strategies to reduce dependency. Economists note that the development could shape the next phase of international trade policy in 2025 and beyond. Next, global cooperation takes the spotlight as the UK and India strengthen technology and trade ties. Prime Minister Keir Starmer is expected to highlight technology and trade cooperation during his meeting with Indian Prime Minister Narendra Modi. Officials say the discussion will focus on digital innovation, green energy, and investment partnerships. Both sides aim to advance ongoing free trade negotiations and expand research collaborations between universities and private firms. Analysts view the meeting as a positive signal for the UK's global economic engagement post-Brexit. Observers add that strengthening UK-India ties may also enhance stability across Asia-Europe trade networks. Coming next, digital policy in the UK sparks debate over online identity and data safety. UK Home Secretary Yvette Cooper has defended a new digital identification proposal that would apply to teenagers aged 13 and older. The plan is part of a broader government initiative to modernize online safety and age verification systems. Officials stress that participation would remain voluntary and that the program aims to strengthen data protection while simplifying access to digital services. Privacy advocates call for additional safeguards, while supporters view the measure as a step toward responsible online engagement. Analysts expect continued debate as policymakers refine the framework before implementation. Finally, tariff policies continue to shape the global economy amid shifting U.S. government priorities. The United States introduced additional tariffs on Chinese imports during a partial federal government shutdown. Officials describe the timing as coincidental, noting that essential trade operations continue without disruption. The new measures extend existing duties to more industrial goods and components. Analysts say the policy aims to reinforce domestic manufacturing while balancing inflation risks. Despite the overlap with administrative downtime, experts view the move as part of a consistent trade framework rather than an emergency action.
That's all for today on FactWireReport. Stay informed, stay connected, and join us tomorrow for more verified global updates. Until then, keep your perspective balanced and your curiosity alive.